Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 6th of May, 2021. Alright everyone, let's get into it. So today I actually did an Ethereum monthly update that I usually do, and I think it's been a couple months since I last did this with Alex Saunders of Nuggets News here. But I basically got on with Alex. We talked all things Ethereum, of course. I talked about, ETH as an asset, scaling, competitors, competitor blockchains and things like that. And, we basically went back and forth about that. It was a really great conversation. Went for about 45 minutes, you can see here. So if you're interested in checking that out, I'll link it in the YouTube description for you. And definitely go subscribe to Alex's channel. He does a lot of great stuff. Fellow Aussie as well, which is really cool. But yeah, definitely go check that one out. So I think obviously the biggest news of the last 24 hours was the Uniswap v3 mainnet launch. Now, we all obviously knew about v3, we knew what date it was going live, we knew what features were coming and all that good stuff. So I think the launch was a bit muted because of that, where it wasn't like it was a surprise or anything. Everyone was expecting it. Then it launched and everyone's like, okay, well, cool, let's migrate our liquidity across. And I think there were some issues with migrating liquidity across with MetaMask. Because it was some kind of bug, and then people needed to kind of do a workaround, or there may have been some issues with like hardware wallets or whatever. But yeah, there was a little bit of a bumpy start there. But I think that they're kind of working through it. But essentially, yeah, this is really cool to see v3 finally live on mainnet. And the coolest thing about Uniswap is that the Uniswap contracts are non-upgradable, which means that v3 is an entirely set of new contracts, and v2 still exists and will exist forever on the Ethereum network. Same with v1. There is no admin key, so they can't delete the smart contracts. They can't upgrade them. They can't change them. They have to redeploy the whole protocol every time they want to do a new version here, which I think is actually really, really cool. And it means that, Uniswap is really, truly decentralized. Like V1, V2, and V3 are all truly decentralized here. I think V3 has some governance features built in as well. So obviously token holders will be able to kind of directly govern the protocol here. They may switch on the fee capture, right? The fee capture where 0.05% of the fee goes to Uni token holders and 0.25% goes to the liquidity providers. But they haven't done that just yet, and maybe they won't for a while. But yeah, essentially V3 brings with it those headline features that we all know and love, like the biggest one being concentrated liquidity, which promises to offer much better efficiency for the liquidity that's provided on Uniswap here, as well as be able to launch a whole new suite of products that people can create around this, where you can basically have, for example, a Yearn vault that is like a Uniswap LP strategy, and it will do all the work for you instead of you having to manage your position yourself. But the design space here is insane. There's a lot that can be done here. I think no one really knows how this is going to play out exactly. The hypothesis is that passive LPing or passive liquidity providing, like what happened with V1 and V2, is not entirely dead, but it is like much less, profitable than just like doing active LPs here. So the consensus seems to be that a lot of people are just going to be going through these things like Yearn vaults or any other products that come out with it. So any other projects that come out with a product like this to do this automated LPing here, which I think is fine. I think that's cool. I think it's a net positive for the ecosystem. And there's going to be other projects that still allow for passive LPs, like SushiSwap still allows it, and things like Loopring's Layer 2 exchange, stuff like that. So we've got like a bunch of different AMM designs that are live on mainnet right now, which is I think really healthy for the entire ecosystem. And the last thing here that was really cool is that each position, because of the fact that they're concentrated liquidity positions now, each position is actually represented as an NFT instead of a ERC20 token now. So essentially what this means is that the way Uniswap has set it up here is that each position is represented as a unique piece of on-chain generative art. So you can see the kind of NFT here. So if you were to provide liquidity for, say, the Uni ETH pair here, it'll give you this NFT, and you can see this in like your wallet. And I was looking at Rainbow Wallet today and kind of looking at how it looks there, and it looks really, really cool. Rainbow is a mobile wallet, for those of you who don't know. It's a really, really cool wallet. But yeah, I think that's a cool little feature there, and it really does, I guess, give something to people to kind of make up for the fact that these positions are not ERC20s anymore, because there were some concerns around that, saying that, well, LP positions aren't fungible anymore, so how do we use them as collateral and things like that? And there's ways around that. You can do like wrappers and stuff like that, and there's smart people kind of working on this, so I wouldn't worry too much about that. But yeah, definitely a little bit of concerns there around that, but I'm sure we'll figure that out. And finally here, developers can obviously start building on Uniswap v3 immediately. There are a bunch of integrations that already went live as well. So if you do have liquidity on v2, you're not required to migrate it, but you can, and it's pretty easy. I'm pretty sure that they have like just a simple migration tool here that you can use. And as I said, there has been some bugs with that at the moment, which I don't know if they're fixed or not yet, but maybe they will be fixed by the time you watch this video. So yeah, but exciting. I'm very keen to see how this plays out over the coming months. And actually, I'm really excited about seeing how the other AMM projects respond to this, especially Curve, because there's some concerns with Curve that Uniswap's going to be able to offer a more competitive stablecoin swapper than Curve is. And Curve's working on their V2. They've already teased that, but I'm very curious to see how that all plays out because it's up in the air right now. So Yearn Finance tweeted out a link to a forum post today that basically details what you can do with your YFI tokens. Now, YFI as a token has had a colorful history, right? It fair launched back in, I think it was August or September or July even. I think maybe it was July, but basically it was fair launched. You could liquidity mine it for a few weeks there. There was no team allocation, there was no VC allocation. And then, you could stake your YFI tokens and you would get a portion of, I guess, like the fees generated by the platform. Now, what ended up happening towards, I think, the end of last year or maybe early this year, the governance kind of voted to take that fee capture off. So you couldn't stake your YFI tokens to earn fees anymore because it really just wasn't worth it. It was worth kind of like, I guess, printing more YFI tokens to give to the team and give to the treasury to be able to develop the protocol more instead of just pay and doing like I think they changed it to like a buyback and build sort of model where they would buy back YFI from the market using the fees generated and use that to also pay out to contributors and things like that. So on that note, and the reason why this post exists is that people are wondering about like, okay, what can I do with my YFI now that I kind of own it here? And I still have mine, and mine is just used as collateral. I have it on Aave paired with all the other stuff I use as collateral. But in general, like that's not the only thing you can do, right? You can do a bunch of other stuff here, as detailed here. So essentially, you can basically LP single-sidedly in Bancor right now with YFI BNT. It's one thing you could do. You could put it in MakerDAO as like a vault or whatever. Put it on Aave. Put it on all these other money markets like Unit Protocol and Cream and stuff like that. And this isn't just like here's a list of what you can do. They also go through essentially kind of like the risk associated with it and the insurance that you can get on it. The kind of assumed APY here and how they derive that APY and stuff like that. So I think this is just like a really awesome resource for people who hold the YFI token because it's not just shilling you on places to put it, it's also telling you the risk associated with it, which is something that I think a lot of people seem to miss, is that anytime you interact with any smart contract, right, there's risk associated with that. And sure, there's some that are less risky than others. For example, Maker is less risky than, I would say Maker is the least risky protocol to put your kind of like funds into in terms of like, it's been around for the longest time. It's been audited by like everyone, who's anyone. It's been formally verified, all that good stuff. But on that note, there's still risks there, and you should be aware of the risks before you do any of this. So I'm very happy to see that here. But yeah, if you're interested in this and you hold YFI tokens and they're just sitting in your wallet and you want them to be more productive, you can definitely go check out this forum post, which of course will be linked in the YouTube description below. So Scoopy Triples from Alchemix is teasing alETH again. So for those who don't know, currently the Alchemix protocol just has the ALUSD vault, and the next vault in line is alETH, which basically allows you to stack ETH. Now, I'm obviously super excited about this because I want to ape into this and basically stack ETH. But again, or stack as much ETH as I can using my ETH. But again, there are going to be risks associated with this. It's going to be a brand new kind of vault here. I'm personally not going to just put in all my ETH at once, so to speak, and definitely make sure these things are like audited and all that sort of stuff. And if you're comfortable taking on the risk, then all for it. But I'm curious to see what the APY is going to be like on this vault. If there's going to be ALCX rewards on it, which would actually, if there was ALCX rewards on it, I would assume that's going to attract a lot of ETH because ETH as an economic asset within Ethereum is unmatched. Like there is nothing else with that much liquidity and that high of a market cap on ETH, not even close. I think the highest market cap token is Uni, which is 30 billion or something fully diluted, or maybe 40 billion. Whereas ETH itself is like $400 billion. So there's a massive thing. There's like almost a 10x, or probably an over 10x gain there. And Uni has way less holders than ETH too, right? And Uni is a bit different. It's not like fully trustless and all that sort of stuff as well. So when you kind of look at that, you definitely kind of I get like a big difference there. So very excited about this. I wonder when it's going to come out. I hope it comes out really soon. I would love to see how this plays out. I would really love to see how much how much ETH it draws in. And you guys know Alchemix is one of my favorite projects within the ecosystem. I've used it a lot. I'm a heavy user of it, and I just really love what they're doing here. So yeah, if you haven't checked out Alchemix yet, be sure to do so. But I'm going to leave it at that because I don't want to shill it too much there. So Peter from the GoEthereum team put out a tweet that the GoEthereum client version 1.10.3 is now out, and they've basically done some major upgrades to Snap Sync here, which is basically a faster way to sync the Ethereum blockchain. So this will probably be the last release where the Snap Sync mode isn't the default sync for it. So you probably won't even notice this if you upgrade. It'll just like I guess like if you upgrade, you've already got like it synced, so you're not going to notice that. But if you're running a kind of like, I guess, a node from the beginning, it's going to, in the next release, Peter says that it's possibly going to just default to this sync mode. So if you're not running an ETH node yet, ETH1 node, you should be. And I think that it's not hard to run one, especially with things like SnapSync. If you've got like a spare PC, or even on your main PC that you just leave on all the time, you should consider running one. You've obviously got to have, I guess, the requirements for doing so, like hardware, but also bandwidth. Running an ETH1 node is definitely heavy on the data. It's not going to slow down your network necessarily, but it's going to chew up a lot of data. So if you're on a connection where you don't have unlimited data as part of your internet plan, then it's probably something that you might not be able to do. But if you do, then in my mind, there's no reason not to be running one, I think. It's not going to increase the costs of, I guess, like your electricity costs or anything if your computer's already on all the time. It may, it may be an increase, but it may be kind of negligible because of the fact that your computer might be working a little bit harder than it normally does. But in general, I just think, anyone who can run a node should run a node. If you care about decentralization, you care about keeping the network, as decentralized as possible, then you should definitely do that. So yeah, go check out this release. If you're already running a node, then definitely go upgrade to this latest release from Geth here. So speaking of core protocol stuff, Superphiz from the ETH Staker community put out his latest video on his YouTube channel called State of the Stake number 45, which is basically running through Ethereum client diversity and how to solve for it. Now, I'm not going to describe the whole video because I highly recommend you go watch it yourselves, but Superphiz is one of my favorite people in the ETH staking space. He has a very sober view on the staking space, and his thoughts around client diversity, which I've spoken about before on ETH2, right, with client diversity and why that's important. His thoughts are very good. He's a lot closer to staking than I am, and he said things that really resonated with me. And actually, one thing that really resonated with me was that you always need to ask the right kind of questions here. It's not like, okay, why is client diversity important? It's like, I can't remember exactly what he said, but essentially it was like, don't ask why client diversity is important, ask why the Ethereum network is targeting client diversity, right? Because most of the other networks out there don't have more than one client. Like even Bitcoin only has one client. I mean, dominant client that makes up most of the network, like 99% of the network. Whereas Ethereum has always tried to be multi-client, both on ETH1 with GoEthereum and Nethermind and Besu and Parity that's now Open Ethereum, right? Or at least Open Ethereum is a fork of Parity. Parity still exists. And in ETH2, we obviously have 4 clients, which I've gone through before. But yeah, I'll leave it at that because I really want you to go watch this video and definitely subscribe to Superphiz's YouTube channel if you're interested in keeping up to date with staking things. He is basically the go-to, and he's the person I always talk to and ask questions to if I have any kind of I guess like burning questions about staking. So yeah, definitely go check out that video there. So Mark Zeller from Aave here put out an interesting update tweet where he says, basically giving the state of Aave. So at the moment, they've got $17 billion of total liquidity across all kind of chains. That includes Ethereum and Polygon. So I guess it's just the two there, but they're on track to do $1 billion of annualized protocol revenue, and $2 billion of protection funds in staked Aave. $1.25 billion of community warchest, with basically their treasury, which is a huge amount. And I've spoken about DeFi treasuries before and how they're getting up there, like in value, like billions of dollars, like Uniswap and Aave, and like there's a couple of others that I can't remember off the top of my head who are in the $1 billion club. But yeah, on that note, the war chest is also growing by $650,000 per week, which is insane, right? That's huge for Aave here. And $2.5 billion on Polygon alone, right? On the scalability solution Polygon here. So Aave is, just as a side note here, Aave is one of my favorite projects in the ecosystem for a number of reasons, but I think the reason that really resonates with me, really speaks to me with Aave is that they are a bear market darling, just like Synthetics is, right? Just like kind of like MakerDAO is, but really Aave, because when you kind of like think back to Aave's origins, they started as ETH Lend. They did an ICO where they sold this Lend token, which is now the Aave token. And then it ran up with everything in 2017, of course. And then it came down and the token value lost like a shit ton. I think it even went down maybe even 99% from its top. And I think it bottomed out at like a $5 million market cap. I can't remember what the price was because there was a conversion when they did Aave, so I'm not going to try and quote prices here. But essentially a $5-ish million market cap. Now, the last time I checked, I can't remember exactly, but I think it's at like 4 or 5 billion fully diluted right now. So, and this was publicly available to anyone, during 2019, or 2018, 2019, so to speak. So you could have bought one of the top DeFi projects for a $5 million cap, and obviously, like, they didn't have a product back then either. They launched their V1 in January of 2020. But if you had been following the project developments and following it all, and you obviously believed in DeFi and things like that, sure, it's easy to say now, but if you've been following all of that, and there are some people that did this, you would have been able to buy Aave back then. You didn't even have to buy much, right? You could have bought like, a few $1,000s worth of Lend tokens at the time and just ridden it up to where it is now. Now, would you have held it and all that sort of stuff? Let's just assume that you were a kind of like a diamond hands investor, and you bought it and then you just held it till now. You made a lot of money, right? 5 million to 5 billion, that's 1,000x. Like, you put $1,000 in, you made $1 million. There's not many opportunities like that anymore on the public market. I would venture and say that, like, you would be very hard pressed to find something that is an investment that will go 1,000x on the public market that isn't just a pure gamble. Obviously, there's all these gambling stuff going on, like SafeMoon and whatever. But if you look at the projects that are based on like just pure fundamentals that you would be comfortable holding, good luck getting 1,000x. Like, if I'm just being honest here, like it's so hard because all the newer projects, or a lot of them, they obviously raise capital from like VCs and early investors, and by the time they hit the public markets, they already have really large market caps of many hundreds of millions. So for you to get 1,000x at 100 million, it would need to go to $100 billion cap, and some of these will do that. But the thing is, that's going to take much longer than it took for Aave to go from where it was to there. So outside of the price as well, I remember meeting Stani, the founder of Aave, at where was it? Osaka for DevCon in 2019. So it was September, I think, or August or whatever. Or actually, maybe it was October. It was late 2019. I met him there, and he was so passionate, like just bleeding passion about what he was building, and like super excited about it. I have a picture with him. Like I just remember it really vividly. Unfortunately, I didn't buy Aave back then. I bought Aave in 2020, but I didn't buy it early on. And that's because, like, at the time, tokens were actually considered a liability for projects. And a lot of people just thought that tokens are useless. It's just ETH, just buy ETH. And, obviously it was like a deep bear market. So everyone wasn't really kind of looking at this stuff. So unfortunate for me, of course, I didn't get 1,000x, but still, like, I got to buy some Aave early, which is good enough. But I guess even outside of that, just seeing the project grow as fast as it has in 18 months, not even, from when it launched on mainnet to becoming one of the top DeFi protocols here, and continuing to grow and, continuing to build out. They have V2 launched and stuff like that. I think when you just look at all of that as like a combination, it is just one of the best stories in Ethereum, in DeFi. And I'm so glad that they stuck to this. I'm so glad that they were able to get through the bear market, keep building, and basically give this amazing protocol that offers so much value to so many people as a money market here. I mean, I use it all the time. I love Aave. Like it's definitely one of my favorites. And I'm sure a lot of you have used it before as well. And maybe a lot of you hold Aave tokens too, which I still do as well. But yeah, I think just looking from a pure kind of market perspective here, there were so many opportunities in 2019 that just weren't seized because at the time, it was just very hard to bet on anything. Like, I was buying ETH, but I wasn't really buying anything else because just the narrative was so different. And even thinking back to, I guess, like early 2019, it was even kind of like worse because I think that early 2019, we were just coming out of like the extremely brutal bear market of 2018 when everything dropped at once and we were kind of going sideways. I remember being at EdCon Sydney and then hearing about Uniswap raising $1 million from Paradigm back then. And I remember thinking to myself, well, Uniswap doesn't have a token. Are they going to have a token in the future? And then I thought, nah, surely not. Tokens are not in favor. Like tokens are a liability. And sure enough, right? I mean, as wrong as I was on tokens, I think it's been like a pretty cool thing to see, tokens become like not a liability, but actually an essential kind of aspect of a protocol for a number of reasons. But anyway, I think I've rambled on enough there. I'll leave it at that for now. But definitely really great to see Aave's continued growth here. And, $100 billion market size sooner rather than later, I think. Once we get more scaling, right? Once Aave is on things like layer 2, I think we're really going to kickstart another DeFi season. I've been saying before where I think that an Ethereum DeFi season can't really take off in a big way until we have layer 2 because we're just locking out too many users. Even at 40 Gwei, it's still too many users locked out. Like, a $15 Uniswap trade is still a $15 Uniswap trade. Yeah, it's better than $50, but it's $15, right? So when we have layer 2 Uniswap, when we have layer 2 Aave, layer 2 synthetics, all that sort of stuff, that's when I think we'll start onboarding like the masses again to Ethereum and newer users, and we'll get that like Ethereum DeFi season. Now, in the short term, things can go up because of just pure speculation, right? I mean, the market's still very hot, but I think in terms of usage and seeing like that explosive growth that we saw the last DeFi season, it's probably going to be like a quote unquote L2 season, I think. But we'll see. Maybe I'm wrong. I mean, maybe I hope I'm wrong, but I just talking to people and then like new users being like, they literally have to use BSC because they can't use Ethereum, and it makes me sad and it really pains me. So that's why I've been promoting layer 2 so much. But yeah, I guess like on that note, I just obviously layer 2 is coming. I mean, there's lots live now, and I'm very confident that there's going to be more coming in the very near future. But until that happens, yeah, I just don't foresee any kind of like big DeFi season, so to speak. But, we're still going to see growth. We're still going to see, Aave and other platforms continue to grow, as I guess the ecosystem continues to onboard, more people in general. Maybe not the masses, but still more people in general. So David Mihal, the creator of the CryptoFees.info website, has updated the website. So basically, it's basically a new and updated version that has a bunch of new features. I think the design's a bit different here. If I go to the website, where is it here? Has he linked it? Yes. So the website's here. Essentially, I'm not sure if this was here before, this little drop down. But if it was, I never saw it before. But essentially, if this is new, it basically tells you, I guess, what the fee model is of each of these kind of networks and apps. Like the website, the blockchain, the source that the data is coming from, like Coinmetrics, and relevant information like the price to sales ratio and stuff like that. So you can see here, obviously, Ethereum still dominates, even at like the lower gas prices than we're used to. Bitcoin trails behind, and then Uniswap is just behind Bitcoin here. But for Uniswap, this isn't gas fees or network fees; it's trading fees paid by traders to LPs here. And that's a lot, right? That's huge. And like Aave, as I just said, Aave is generating so much right now, so a huge amount here as well. And then you make your way down the list. And it's quite funny, Dogecoin's been kind of getting up the list lately because of Doge pumping, which is really funny to see. And Dogecoin's actually one of the more quote-unquote scalable chains, and it's not really used that much because, except for probably arbitraging between exchanges, because no one really uses Dogecoin for much. Maybe it's used as money sometimes for little things, but it's not like it has smart contracts or anything, right? So, but yeah, I don't want to bash Doge, but and then you kind of like scroll down the list here and you can see like all the smaller apps and smaller chains and what fees they generate and things like that. And there are some chains that are literally just not generating much at all, and they're kind of like price to sales ratio is ridiculous. I mean, Litecoin's price to sales ratio is 8,000. 8,000. That means it's like extremely overvalued based on its fee revenue. Now, of course, these networks are not just valued based on their fee revenue, they're valued based on a bunch of other things here. But like even other things like Cardano, 10,000 price to sales ratio, which is absolutely ridiculous. You guys know my view on Cardano. I'm not gonna say anything else here. But you know, and compared to Ethereum, I'm like, look, Ethereum is only 65. That's like normal for tech. I guess like for traditional tech, it's very normal. And then you kind of have a Bitcoin is even pretty high, 436. But obviously, Bitcoin is valued based on more than its fee revenue, of course. You know, Uniswap's quite low actually. I would actually say it's undervalued. You know, by the fees that it's generating here. You know, SushiSwap as well here, generating lots of fees, but I guess like its market cap is still quite low. But you can see here, like all the apps and stuff like that are pretty low. But then when you go to like the other blockchains, like Avalanche, I mean Avalanche isn't that bad actually, but like you know, as I was just showing you, like Cardano and stuff like that, you know, it just gets ridiculous. And like Ripple, 35,000, like what the, like what, like that just means that Ripple is just like the most overvalued thing in history. I mean, even if we look at other things, like even Bitcoin Cash is less than that. I'm just curious to see if anything else is more than Ripple. Like I would wager that probably not. Maybe Polkadot. Yeah. This is getting ridiculous. 500,000 for Polkadot. Stellar 238,000. But as I said, I mean, taking this stat as like in a vacuum and saying, okay, well, these things are only valued based on the fees that they're generating. That's not true. In saying that, I do think things like Polkadot are really overvalued, right? I do think a lot of the other blockchains are super, super overvalued, and they have zero reason to be worth that much. And you know, imagine if Ethereum had like even just 1,000 price to sales ratio here. That would mean that the ETH price would be like tens of thousands of dollars. It would be some ridiculous price. Well, maybe not so ridiculous, but you know, up there. So yeah, I just looking at this sometimes is just like really funny to me. But this is a really good site for keeping track of this sort of stuff. But yeah, I guess like kudos to David for updating this here. This is like a free resource. It's really cool. He does have a Gitcoin grant, I believe, at the bottom here. If you want to donate to support him, maybe it's not here right now, but I've seen it before. But yeah, I'm glad that he keeps this kind of like website updated and keeps kind of working on it and keeps it kind of fresh, because I think a lot of people visit this to just see kind of like what the fees are like for different networks. And I visit it almost every day to see how Ethereum is doing, because this is going to show us how much ETH is going to get burned with 1559, right? But yeah, I'll leave it at that for now. You can go check out the full post in the YouTube description. There's a couple other things I wanted to talk about that I think is going to actually take me a little while to talk about, because I'm going to be talking about ETH's value again. So this is a really interesting tweet from Lim0 here, where they said, the explosion of stablecoin supply was supposed to weaken ETH's monetary premium. In actuality, on-chain ETH remains the base pair currency for almost everything. On the contrary, it is BTC that lost the gateway to alts privilege on centralized exchanges due to stablecoin pairs dominating. So, I think I need to give a little bit of background here. Last year, so as early as mid to late last year, and I spoke about this in the newsletter as well today, you can go read that. But as early as mid to late last year, there were people saying that ETH would not accrue any value of the Ethereum network. People legitimately thought that everything built on the Ethereum network, like the tokens of the different DeFi apps and stuff like that, would accrue all the value, and ETH would be left in the dust. Now, ETH was $200 at the time. ETH is now $3,500. We can definitively say those people were completely wrong, and you know, bears in disbelief, as I like to say. But I want to explain why this happened. So let's kind of like go back to this tweet now for now. So there was also, in addition to like the DeFi tokens capturing the value narrative instead of ETH, there was also this narrative that stablecoins would basically mean that ETH wouldn't be used as a money within the Ethereum ecosystem. Now, at the time, and a lot of Ethereans like me were like, well, this is dumb. Like, Ethereum or ETH isn't just used as money. It's used as much more than money. Like, I know we say the meme ETH is money, but we don't say ETH is only money. If ETH was only money, I'd be much less bullish on it. But ETH is much more than that, right? And, you know, I know I'm preaching to the choir here, but to quickly run through it, ETH has three main kind of use cases here. It is used as trustless collateral within DeFi, the only trustless collateral you can use on Ethereum. It is used in staking, the only asset you can use in staking, and it is used to pay fees, the only asset that you can use to pay fees. And post 1559, even the flash bots or the MEV extractors are going to have to, the miners are still going to have to pay ETH to the network instead of taking bribes around the network. And then obviously fees will get burned and all that good stuff. So those are the three main value drivers here. But in addition to that, ETH is still used as amazing money within the Ethereum ecosystem. It is still used as a unit of account to price things like NFTs. It is still used as money and the preferred money for lots of different things. Merch is sold priced in ETH, right? You have ETH as a trading pair on AMMs and a dominant pair because it's worth so much, right? As I was saying before, it has so much economic bandwidth. So stablecoins are additive to Ethereum, and because stablecoins allow us to do much more within DeFi, which allows ETH to kind of fulfill its role as trustless collateral much more, much more efficiently and much more effectively, because stablecoins take that role of MOE. Or like money. But that doesn't mean that ETH's monetary premium and properties go away. It's still used. But stablecoins can be used as collateral and all that, but ETH is much better collateral than stablecoins is. For a variety of reasons, because people, when you use ETH as collateral, as long as you manage your position safely, you don't have to give up your ETH to basically leverage it. Whereas if you're using stablecoins as collateral, you're not in an active position of ETH. You're not holding ETH, you're holding stablecoins. So, but that's why I don't use stablecoins as collateral. I use my ETH because I don't want to sell my ETH. So, and on top of all of this, there was, as I said, there was also the narrative that DeFi tokens would accrue all the value and ETH wouldn't accrue any of the value. And that's dumb for all the reasons I just outlined. But there was also a prevailing narrative that all you had to hold was BTC and DeFi tokens. Now, I don't think I have to kind of say it to any of you guys because I'm sure you follow this. But since the bottom in March of last year, ETH has greatly outperformed Bitcoin, right? The ratio is at 0.06. The ratio at the bottom last year, I think, was at 0.02 in March, which is a 3x on ETH in a year and a bit, right? So not only that, but the DeFi tokens, if you look at them right now, a lot of them are down a lot against ETH. Go look at YFI against ETH. From its top, it is down so much. I think at the top, it was worth over 100 ETH. Now it's like under 20 ETH. So, and that's measuring top to bottom and all that sort of stuff. But most people buy on the way up, right? They don't buy early on. If you're just looking at the people who bought at the start, yes, they're still in profit against ETH. But looking at like a risk-adjusted basis and where most people got in based on the volumes and based on like the holders, people have underperformed ETH by holding both BTC and by holding DeFi as well. Now, that's not to say that you can't hold DeFi tokens and you can't outperform ETH, and that's not to say that every DeFi token has underperformed ETH. Some have outperformed, but the quote-unquote blue chips have really lagged ETH lately. So the argument that ETH will not accrue value is debunked, like completely bunk at this point. There is no reality where this is true. There is no reality where the bears have been right. They have been wrong since Ethereum existed. I mean, people will say, oh, they were right during the bear market. And I was like, okay, but it was a bear market, right? You would be right about being bearish on ETH if during a bull market, ETH didn't go up or ETH underperformed Bitcoin. And I think a lot of people late last year just held this opinion and that they've just been completely blown out of the water. And it's surprising to me because obviously I always held my conviction on ETH. I knew it was coming. I knew about 1559. I knew about the merge, and a lot of you did as well. But it's cool to see the market actually be efficient here a little bit and actually start to price all of this in. Though obviously I hold DeFi tokens, I want them to perform as well. But DeFi tokens have much more risk than ETH as an investment. So for that risk, you want more than, even a 2 to 3x against ETH. You want like a 10x against ETH for the amount of risk you're taking on. And a lot of these things, I don't know. I really don't know. ETH as an asset is just so strong right now. And that's not to say you can't outperform it, but there's buying something, outperforming it, and then holding it and not selling it and then underperforming. So you have to, this is why trading and investing is so hard. You have to basically buy the asset, outperform ETH, and by trying to outperform ETH, you're basically, it's like you're running a race against someone and you're consistently trying to outrun them, but that person has more stamina than you do. So eventually they're going to catch up to you. And you're faster than them, but yeah, eventually they're going to catch up to you. So from that kind of point of view, you have to outperform ETH, and you also have to sell at the right time, and you have to account for taxes. A lot of us have to pay taxes on this. So you put money into a DeFi token. It goes 10x against ETH, right? Maybe you landed a moonshot. Do you sell it 10x against ETH, or do you get greedy? Do you think, wow, maybe this can keep running? I've gotten 10x, why not 20x? A lot of people do this, especially the newer people. I've done this before when I was newer. And then when you sell, a lot of us have things to consider, like long-term capital gains, where if we hold it for a year, we get a discount on our tax. But if we don't, we have to pay the full income tax against that. Now, depending where you live, this can be quite high. Let's say you're paying 20, 30% of income tax. Like I'm paying more than that. So for me, it's really hard. But say you're paying 20, 30% in income tax. So you sell, you're automatically down, quote unquote, down 20, 30% because you have to take that out for tax, right? And then essentially take that out and then, okay, you're up against ETH still, but was it worth the risk, right? And this is assuming that you sold at the right time. So, I mean, just thinking about it, it's hard. And this is why most people just opt to hold ETH. And I'm not saying that you can't play around with things. And this is an investment advice, of course. But I'm not saying that you can't play around with different things and try to outperform it. But if you're putting your whole ETH stack into something, you better be, very confident that that's going to 10x against ETH or something for the amount of risk that you're taking. And you better be confident you'll be able to sell it. And you better be confident that you'll be able to outperform the tax that you owe as well, and get the 10x against ETH back that you kind of like made from that. So, just something to consider. As I said, I'm not saying what to do and what not to do, but I think it's something very important to think about. But I'm gonna move on to the last tweet I wanted to talk about here because I think this is going to be the longest refuel ever. Wow. But this was another interesting tweet about ETH from Sandep from Polygon here, where he says, "Can someone explain to me how BTC is a better store of value than ETH? ETH has more users, product market fit with DeFi, NFTs, and DAOs, real use as gas, as collateral in DeFi. Even Warren Buffett can't refuse its intrinsic value, unlike BTC. Reducing supply with EIP 1559, and proof of stake, which leads to locked supply." I mean, I can just say that. I said it in my reply here. It's not. BTC is not. I believe that for years. ETH is a better asset than BTC across every single measure that you can even think of. I think ETH is going to flip BTC. I have absolutely no doubt in my mind about that. I don't know when it's going to happen, but it's going to happen. And I think that Ethereum and ETH's continued utility is going to drive way more value to ETH than it will to Bitcoin. And as I've said before, I think ETH is going to be a $10 trillion plus asset sooner rather than later, which is 100,000 plus ETH price here. Because of its immense utility. So I'm just going to leave it at that. I'm not even going to go too far into this because I've spoken about this lots of times before, and I'd be preaching to the choir anyway here. But yeah, long story short, ETH is a better store of value than Bitcoin. I'm not afraid to say that. I think more and more people are waking up to that fact. I think as ETH continues to perform up against Bitcoin, more and more people will wake up to that. But I'm going to leave it at that for now because yeah, that's it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up. Subscribe to the newsletter. Join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.